Boom back, we're live. Feels good to be making these, documenting the journey. But this week is an interesting one. Psychologically wise, as I'm analyzing the markets, the past 3 weeks I have not taken a single trade. And the old me of let's say, how long is it now? Let's say about this time last month and the prior months up to that. That version of me as a trader would have been itching to take a trade. I'd have been analyzing markets, seeing the move, my direction that I analyzed just without a setup. And it would have been, I'd have been fiending for a trade, seeing these markets, because I was so focused on the money. I need to pass the challenge. I need to pass the challenge. I need to pass the challenge. Then I can make the money. Then I can get the money. Then I can quit my job. Then I can start living that life of freedom. But with my recent experiences and losing the 100K and what that taught me psychologically, it completely shifted it. An absolute 180. When I lost it, I just sat and stewed in it. I just thought, okay, what did I do wrong? Because I had the challenge right there. I had the challenge and I lost it. I was up 4,000 on that challenge. Payout wise, I was up thousands and I was so close, but I lost it. Why did this happen? And I asked myself that and found I was focused on the money, which led me to overtrade, which led me to hit my daily drawdown limit, and then I lost it. So that massively shifted my mindset and the patience aspect of it. And I'm going to dive into the markets now. Make sure it's working. Right, here we go. So first things first, these are the markets that we've got as a top pair. So we've got GDP AUD, and obviously starting off on the weekly. It's not the nicest trade from the weekly aspect because we are coming to this EMA. It's not the first push down of this counter trend. You see push, pull, push, pull, push. And what we're anticipating is another bearish candle to the downside. But we come on the daily and we see a spectacular, the exact trade we were waiting for last week in the creation. It happened. But we can see left head, right shoulder, retesting this neckline, retesting this solid area of interest. We've had everything we need. We've had the doji rejection, we've had the bearish engulfing, a 4-hour left head, right shoulder, and now we're just anticipating for a daily wick pullback into this area and then the push. But the 4-hour closed below. And I always say to myself, okay, if the market just continued to push down, then it came back up, you would consider that a shift of structure. Just because you want to enter, just because I want to take this trade, don't disregard this information, which the old me would have done because, again, I wanted the trade. But don't disregard that. So understanding that, I'm okay. If price is to come back, we'll see what happens, right? We'll see what happens. Next is AUDCHF, which is correlating in a manner, being that it's AUD, GDP AUD, push down, AUD strengthening, AUD CHF pushing up, AUD strengthening. But AUD CHF looks a lot cleaner, because if we run through GDP AUD and where it's currently at with the bearish engulfing, we can anticipate for tomorrow to create a wick pullback and then the push down. But if AUD CHF does in fact create that push up following AUD and its strength, this is the trade that can set up nicer, because we'd see a break, push up, a nice bullish candle, which would create this morning star, and then we'd simply wait for a higher low on the 4-hour to then take to the upside. And you can see how that plays out on the 4-hour even sweeter. We got a left head, right shoulder. Price would be breaking and retesting the neckline, retesting the EMA. We'd be breaking above this strong resistance on the 4-hour as well, adding that extra confirmation. And we'd have the daily rejection confirmation above the EMA. So when price does create a 4-hour high low, it would then also, as well as those 4-hour confluences, have the daily EMA as an extra support to push to the upside. And we would also see AUD on the GDP AUD and see how that performs for Monday. So this is potentially a Tuesday trade, but it's just a very nice area of interest. We've seen highly respected. We've seen the slowdown of momentum. Buyers start to come back in, and then we're just waiting for the confirmation that they do intend on pushing this market to the upside. Weekly candle, again, it's just a bit of a turn off, you know. It's big bullish candle, big bearish candle. So, but the next pair is USD CAD. USD CAD. This one, I've come to my senses now, but if I hadn't, understanding market structure and where this trade has the potential to go is, you can see we're clearly pulling back to then create potentially the next impulse. Simple market structure, and it's just so clean. Impulse, super slow pullback. We've had one evening star rejection. Now we've had another evening star rejection, both off of the EMA. Price has now come and closed below this weekly support and resistance level. Now we can anticipate for the actual wick pullback push to the downside. So this trade has holding potential if the strategy comes, but obviously being in this horrible little section, we can see it's very strong support, and we're in this range. But right, we analyzed this market last week for a push, happened. Not saying it's going to happen again, but if we were to consider, right, the reason I didn't take any trades last week on this pair was I moved it out, because when I was looking at it, I was analyzing, and it's shifted structure here to the upside, bullish, higher high, higher low. So I couldn't take that sell down because of the daily. But now we've shifted bearish, and expected for price to reject this level. Pulled back to retest the previous structure, support, come to the left, support, with the wick rejection, to the left, beautiful resistance, support, resistance. So you can clearly see how this area has been respected by sellers and buyers. So now when I'm looking at this week, I'm seeing, okay, potential lower high, previous structure, valid area of interest, psychological level, EMA rejection. Then I come on the 4-hour and I just think, bloody hell. Engulfing, shift of structure. What are we anticipating for now? simple 4-hour higher low, lower high, reject the EMA, reject this support and resistance level on the 4-hour also, as well as the daily, and then boom, give us our entry. First take profit would have to be that major support. But thinking ahead, if this is actually that weekly rejection, and this is where the weekly is going to create that next impulse, we're highly likely to break through this level this week, breaking it down so that the next week can have the retest and continuation following the momentum that potentially might be made, because this would also be a left head, right shoulder, break, retest of the neckline. You know, this is the way you got to look at the markets. You got to think steps ahead on every candlestick. Again, 4-hour spectacular, 2-hour spectacular, actual shift, 1 hour spectacular, shift of structure, retesting the EMA, or we now price to pull back a little up, give us some rejection, bearish engulfing, closing below the EMA, boom. Entry doesn't even need to be, stop loss doesn't even need to be that high. It would come down to here, maybe even tighter, but take profit right there. Simple, right? Simple. I like this trade a lot. I do. Next market, Euro AUD. AUD, when you pick your top pairs, right? This is a pro tip. When you pick your top pairs and you understand the probabilities of each pair, I'm not looking at, okay, when I'm analyzing, I'm not looking, okay, Euro AUD, GDP, CHF, USD, JPY. I'm just clicking the next market, analyzing what I see. Then when I've selected all the pairs, I go and I look and I see, okay, GDP AUD, AUD CHF, Euro AUD, and I see the correlation between them all from my analysis indicating that AUD is going to get stronger. So that just sort of adds confluence to, if one of these markets start rejecting, okay, that's showing that AUD is actually getting stronger. So that's just a little added thing after picking. I'd never apply that to when you're dissecting all the markets, because that will have an influence on your mind, which I've learned from experience. And then you'll start thinking, okay, well, this pair is indicating going down, this pair is indicating going down. Okay, this has to go down. No, it doesn't. But it just adds credibility. But Euro AUD, left head, right shoulder, break, retesting the neckline, retesting the EMA, rejecting the psychological level. We've already had the rejection. The weekly, again, these AUD markets, they're just filthy on the weekly because of how strong the candles are. But when you move down time frames, it's very clean. Lovely area of interest, resistance, support. Then on the 4-hour, we also have a beautiful, beautiful price action. What I'm waiting to see anyways is, you see price slowing down. Ideally is a break above, so we can have a clean higher low here and then create that shift, break, retest, pull the EMA up to add credibility, sorry. And then, yeah, simple shift of structure, because when we're looking at the 4-hour shifting structure, yes, you could count this point right here. It's just not clean enough. Realistically, what we want to see is a higher low like this up here, created from this, which would be a push, break, retest, right? So Wednesday trade, maybe Tuesday, Wednesday trade. Next, NZD JPY. NZDJPY, a lot of these markets, weekly engulf candles, daily engulf candles, wick pullbacks, right? That's pretty much that's how I trade. That's how I like to trade anyways, because that engulfing on these higher time frames, it just screams out momentum, right? And once you understand the wick pullback method, a weekly engulfing, a daily wick pullback, what are we looking for on that wick pullback? A lower high or a higher low? It's just so simple. It really is. But we're looking for a wick pullback to this area of interest. I do have it marked, but as you see, I wrote the area of interest is this is a lot of unclean rejections to the area of interest I've marked. A lot of wicks to the upside, a lot of wicks to the downside, close below, then push up. Like there, close below, push up, close below, push up. Wicks up, wicks up, wicks down. Closed above, came back down, closed above, then. So I'll be a bit wary about that. But overall, it looks super clean. We broke, came down, went bullish, shifted bearish here, simple lower high, sell to these lows. 4 hour, the 4 hour needs to clean itself up a little, because at the moment we need to see either a shift, a new lower low, so then we can shift, so that it can give us that shift back again to indicate the daily continuation. But it's one of my lesser favorite pairs this week. And then EuroCAD. EuroCAD is NZDJPY and EuroCAD are both on my iffy list, simply because of where price is. You see bearish engulfing on the weekly. We can see the momentum's been slowing down overall, but we've just shifted structure just about. So I'd be either looking for price to pull back to where it previously has, or push down a little more, retest, sell. And you might think, okay, don't you need price to close at the area of interest? Yes, but if price does pull up to these highs up here where price is previously rejects here, engulfing candle below, confirming the low, not the confirming, but giving us the confirmation that sellers are interested in the market, then we could go on the 4 hour to identify just a little retest and then take the entry. That's ugly as fuck. That's ugly, sorry. Yeah, super clean on the 4 hour, resistance, support. EMA come down into this area, reject it. And that's it. And that's it for the pairs. You know, favorite pair is probably going to be potentially AUD or Euro AUD. USD card. This is a higher risk trade just because of how much nonsense has gone on in this area. But yeah, overall, a lot more opportunities, a lot more potential than the past 3 weeks. You can see on the weekly time frame that there's periods where the market's hot, and we caught those 3 wins in a row, over 10 risk to reward made. But then we've just had 3 weeks of absolutely nothing. And it's, you know, it heats up, then it has to cool down. And it's just a matter of understanding that, having the patience to wait it out, because I could have placed, let's just say I placed 1 trade a week. I could have placed 3 trades in those slow, unprobabilistic markets, lost all 3, and then just given back profits made just because I was impatient. And these markets right here are an example that I wanted to put because the old me would have most definitely selected these pairs just because I haven't taken a trade and these all they look good, but following my strategy and trading plan, they don't look the best. So we've got NZD USD again, left head, right shoulder, retested, rejection, bearish engulfing, beautiful resistance, beautiful support, retest that, rejection, psychological level, absolutely phenomenal. Not taking this trade. Why? Because the market is technically bullish, unless you want to count this lower high up here. But again, it's just a bit iffy. It's just a bit iffy, you know. CAD CHF again, we bullish engulfing at a weekly low, potential shift of structure on the daily, simple high low, sell back up to here. This is probably one of the cleanest ones, I can't lie. And we have what, CHF weakening, CHF weakening, CHF, CHF strengthening. Yeah, I like that. I like that a lot. You just see the they're so clean. They're clean to look at, but when you actually dissect them and think, okay, is my strategy going to apply here? This shifted, granted, yes. But again, the most recent time price was here. It was faffing about in a consolidation. So if price were to come back and give us the rejections just like it did here, I'm not looking to take the tiny trade. I will happily, like I've done, wait weeks on end for the daily to give me a crisp opportunity, just like we have on Euro AUD This is a crisp opportunity, trading with the trend, a giant left head, right shoulder. Beautiful. That's not beautiful, but the daily is beautiful. Next one is Euro GDP. Again, bullish engulfing, indication that we're going to continue to make an impulse. Simple retest of this resistance acted as support here. Euro USD, the weekly wick is a massive turn off. Yes, we have the potential to fill this week, but of how slow it's moved in the past 4 weeks, I'm okay. But we broke out, we're retesting, support, resistance. All we need now is, what would make it nice is a EMA rejection, bullish engulfing, go to the upside. Euro CHF, again, just massive support, 3 weeks rejection, clearly slowing down. All we wait for now is a shift of structure, bullish, high low retest at the area of interest, push to the upside. GDP NZD, bullish engulfing on the weekly, daily, shift of structure, wait for that high low, buy. GDP USD, bearish engulfing, daily shift of structure, retest, sell. NZD CHF, bearish engulfing, anticipating the weekly wick pullback, daily lower high, retest, sell. USD CHF, dodgy looking wick, looking for the retest and sell. It's just the same strategy and same thinking that I've applied across all the markets, but the strategy can actually be followed on the top markets that I've selected, because that is the key to consistently being profitable in trading. It doesn't matter how many trades you miss, it doesn't matter how many trades you win. If you're not following that strategy, if you don't have the patience to apply that strategy or the discipline to always wait and tick every single box off, the consistency will never be there. And that's what took me so fucking long. Excuse my French. That's That's what took me such a long time to fully grasp and understand. And now, 3 weeks no trade, it's cool. Coming off a 3-week winning streak, I didn't let that euphoric state of mind that, "Oh, I won the past 3 trades. I can predict where the market's gonna go." Yeah, it doesn't follow my strategy, but look, I've been killing the markets. Nah, no. Patience, young one, patience. But again, taking this mindset now into the next 6 months, 6 to 9 months, just like I look at the markets and the probabilities, I look at the future and I look at the probabilities and I see myself completely shifting my life in these next 9 months. By the time I'm 21, I can see myself quitting Tesco, trading full time, building a course, and reaching completely new heights, reaching the heights beyond what I've envisioned. I'm seeing it. I'm seeing it right now, and yeah, it's just work. Work. Not trading is work. Me analyzing the market, saying my strategy isn't here. Control yourself. Do not trade. That's work for a trader. Most people don't understand though, because I'm working on my business. Oh yeah, what work you doing? Oh, I'm sending out emails. Oh, I'm texting a supplier. Oh, I'm setting up the website in here, but no one understands that. Not doing anything, just sitting on your hands as a trader because your strategy is not there. That is our work. Our work is mental. A lot of people, a lot of people don't have the psychology for trading, and that's why so many traders lose all their money in the markets because they don't go through the learning, all those learning phases that you have to go through in order to develop it. But on another note, it's a potentially nice week ahead. I might win, I might lose. As long as the strategy's followed and I pick the cleanest trade, it's cushy.